This is TJ with the Counterpunch Trading, Friday non-farm payroll, March 6th. There were a lot of great trades today on many different markets, so I thought I would do a quick walkthrough on some of the popular day trade Forex opportunities that existed and that you can continually trade with great success on a regular basis. The Euro-US 377 tick chart is definitely a good one. You could do the European session at 2 a.m. Eastern Standard Time and then come back and begin the U.S. session at 8:30. Of course, you would have had to wait for a bit after the non-farm payroll report today. So let's just take a peek at what happened. Here's the European session. Remember, we're going to stick with our directional indicator when we're trading Forex. There's a trade, but it's too early. In fact, it's still yesterday. But it doesn't get very far. And by 2 a.m., which is right around in this area, well, right here, you're able to pick up the entry on the newer trade, which is what we typically like to do, although you could take the older trade, either one, but I always try to go to the newer one, just as a general habit. And while that was still early, it took a couple hours, but then it finally started to pick up. So right at 2 a.m. it comes up and it hits the entry. And you can see the target one is a 12 pip target, 17 pips, and 22 pips. So definitely worth trading. You could take off a quarter of your position at each target, as we've always discussed. And after taking a little bit of heat, it then just falls and it hits its targets all the way down perfectly on this bar. You can add your position here if you like to take add-on trades, and you could even add your position here. The more add-ons you take, the more likely it is that one of them is going to fail. But this kind of started off early. You could see the faster trend on the higher time frame was just turning and getting underway, breaking out of some choppiness, staying with the direction of our mustard line or 50 EMA, and it was just crossing over the zero line here when this trade set up, and at a pretty good velocity, as you can see. So you can make an argument to take those trades, and if you did, you would have been very happy. This trade also hitting all its targets, and this trade at least hitting a nice big target down here and then stopping out in this area. Okay, so that's a nice European session. That's a very profitable session. So now we're waiting for the U.S. session. Non-farm payroll comes out. You can see right here. Look at how the counterpunch called the trade. Now this is against our directional. It's also before the start time, and it did get caught up in a little bit of noise here with the release. Luckily we weren't in it, but the counterpunch had the right idea. You can see with that setup there. You don't see any long setups except for this one, which hit its target. But again, that's a trade we're not interested in because it's during a time we don't trade. It's also against our directional. So the next trades are starting to set up, and it's a reaction to this rather large bar here. But none of them trigger in. In fact, the long one does. But remember, directional's red. We don't take long trades. Here's another short trade that triggers in. That one does go. Nice targets, 20 pips, 27 pips, 35 pips. And it makes it to the first target, a little bit past. So you're taking profit there with about 18 pips after spread and moving your stop down to protect the rest of your position. So when it comes back up strong, you're out with break even. So basically an 18 pip trade. You might want to take one more trade since that was just a target one and you're still in your trade time, right? So at 9:38 there's another short, and that one triggers in as well. And that comes down and also gets past target one. And that's good for another 18 pips, almost the identical trade, and then comes up and also stops out for a break even. So two 18 pip winners to target one, and that's the session with the Euro-US on a 377 tick chart. Now I really like the tick charts because when there's a lot of action, you get more dynamic setups based on order flow. If you're using MT4, obviously you can't trade tick charts. You can look at the 5-minute chart. That typically works well also. Let's just take a peek at what it did today. During the European session, you were able to get short once the line turned red and grab a nice target 1 before stopping out over the momentum line. Then you could have taken another one here, and that would have hit a nice target 1 as well, and then come up, and you would have adjusted over that little spike there. So you could have survived the pullback and been able to grab a target 2 and a target 3 and a trailer. Remember, we want to work around near term chart levels if it's not that far. All right, so a nice big winner in the European session. But when the big non-farm payroll report comes out, you've got all these 5-minute bars, and it just takes a really long time to be able to get these. And the indicators, the way the counterpunch works after the exhaustion point, it's just too large of a trade. You really don't want to mess with a trade like this. If you would have taken the trade, then you would have ended up making some profit, but you would have had to just trade without the targets. That's what I like about tick charts. There was a nice long trade here, but you couldn't take it. And at that point, it's already getting too late in the day, and you really can't do much during the U.S. session with the 5-minute chart. And this is the pound Aussie, by the way, not the Euro US. So, my mistake. The pound Aussie is a great market to trade, but on the Euro US 5-minute, you really couldn't take a trade until here during the European session at 3:35, and that ended up being a great trade, as you can see, really great. Don't get me wrong, the 5-minute chart is an excellent chart. You just have to understand how it works. But when you get a huge amount of trades taking place within 5 minutes, that's when you just have to be careful, because it's going to take time before the scaling gets back to normal, and there really aren't any good trades in here. If you go short here, you can. It's not that big of a deal. You're risking, I think, 30 pips, so you could certainly do it. And it gets fairly close to target 1. But ultimately, you're going to end up having to trade for profit and exit the trade at some point. It actually gets to the target on the very last bar of the day, as you can see. Or almost gets to it. So, just keep in mind, if you're trading a time-based chart and a huge news event comes out that gives you these unusual reactions, these big long price bars, you're probably better off with tick charts, because then you could trade all this action. You're going to get a lot more bars that represent what's really going on, and you're going to get trade setups like we saw with the 377 tick chart. Definitely some great end of day trading. I showed this trade on another video with TradeStation, but that's a really nice short. I was in that trade. I was able to get out at both these targets today on a really great move down on the pound US. The euro yen was good as well. Here's a 15-minute chart. I'm just trying to give you a different kind of look. This one got short not until here. And actually, you would have missed it, because by the time you got your confirmation, the price had already fallen, and you wouldn't have been able to grab that trade. So on the 15-minute chart, a missed opportunity. But if you see that, you can always drop down to a faster chart and try to grab a trade that's short on a 5-minute chart, for example, or a tick chart. There's nothing to stop you from doing that if the setup is there. And you could even see some nice trades on the hourly chart. This one would have canceled. Could have grabbed it here. Could have grabbed it here. Not my favorite time frame, but some of you might like it. Just looking at a TradeStation chart on the 5-minute with the euro yen, you would have had a nice short in the European session. You had a long here, and that one barely hit its target 1. Target 1 was only 7 pips, though. So that probably was a small losing trade, but then you're able to take the short when it turns red here. And that one's going to give you a nice 12, 19, and 26 pip target levels along with a nice trailer. So the 5-minute really nice in the European session. Then of course you had the big non-farm payroll. It did end up getting long if you took that trade. Big risk on that one, so you probably have to just manage that when it goes up and trade for profit. But you did have some smaller trades setting up that were able to hit target 1 and target 2, and then this one hit target 1. So definitely opportunities to be successful on the euro yen with the 5-minute today. And this short trade here, it's already, could have grabbed it, I guess, when the directional turned down right here. And that one did come down and hit some really nice targets. The question is, do you keep trading if you're already successful with this group over on this side? But a lot of opportunity here on the euro yen to succeed today with the 5-minute chart. All right, we'll take one more look. This is the pound US. 2 a.m., same deal. And right at 2 a.m. was right in here. It was turning red. You had the purple trade. You're able to catch it in one of these two bars, and you can see how it comes down, hitting all the targets. A great trade. You had 10 pips, 15 pips, and 19 pips. Minus spread, of course, and then a nice trailer all the way down to here. So that was a good trade. And then during the U.S. session and a bridge session, we don't talk about the bridge session much between the European and the U.S. sessions, but if you'll notice, or if you have noticed, nearly every single day there are trades that seem to set up and win. And if you want to trade during this time frame, I think you probably could, but I would just encourage you to do your homework and follow the success guide and do your back testing. But that is a time when you might want to trade, depending on where you're at in the world. Just test it first. All right, so non-farm payroll comes out. Looks very similar to what we saw in the Euro-US, but the pound-US is different, not exactly the same. This trade on the Euro-US didn't trigger in yet, but on here in the pound-US it did. And it comes up, and it holds. The stop holds. You don't get long because we're down, and there's no confirmation for that counterpunch trade anyway. So you stay short, and it comes down and hits all the targets. And that's good for 17, 24, and 31 pips. Minus spread, of course, and then the trailer even further down. So I just showed you a good mix of several pairs, different time frames, different types of charts, and it continues to prove that with Counterpunch Trader, you can day trade Forex and have consistent success. I hope everyone has a great weekend, and I'll see you on the next video.